Hey Moneymakers, I'm Kalila Reynolds and welcome back to another episode of Taking Stock Live. Can you believe that it's episode 250 of Taking Stock? We've been here 250 weeks with you. Wow. Can you also believe it is the last show of 2024? The year is basically done. Next week is Christmas and we're all feeling a little bit festive already. Hope you had some nice Christmas cake, some cereal, some whatever it is that you like to make the Christmas and the holidays special. Now, drop a fire emoji if you've been here with us this entire year. And drop some extra fire emojis if you've been with us all 250 episodes. Because you guys, you money makers, you are some special people. And we love to salute you. We love to see, the support. We love to see you guys in the comments. We love your participation every single week. Now, a lot is going on, as usual, in the financial world this week. Even though we are winding down for the year, we still have some new developments, and our analyst panel is on standby for an all-analyst show this evening. Ask the analysts as we wrap up 2024, so stay tuned. And of course, let me know in the comments where you're joining us from, which part of Jamaica or which part of the world. Now, come on, let's get this money. On this episode of Taking Stock, it's the last episode of 2024. How did the global markets perform this year? And what investment opportunities are out there for you? Plus, AS Bryden is set to launch a takeover bid of CPJ. We'll discuss these and more tonight.
But first, here's What's Hot, brought to you by JMMB Group, your best interest at heart.
JPS says it plans to invest $17 billion to improve its infrastructure next year. CEO Hugh Grant said the investment is part of their commitment to improving performance. JPS has been under the microscope since its response to damage from Hurricane Beryl. Some Jamaicans had to wait up to 5 weeks before power was restored after the hurricane. JPS said the $17 billion upgrade will include reinforcing power lines, replacing poles, and expanding the smart grid technology. Port operator Kingston Wharves said it should be smooth sailing this Christmas season as it does not foresee any major cargo backlog. The company said that most of the larger manufacturers have already brought in their goods, so that should free up the ports. However, when it comes to air freight, the company said that online shoppers can expect the typical delays this time of year, but there should be no bottleneck or serious backlogs. The Bank of Jamaica has reportedly begun rationing the supply of $5,000 notes issued to banks for stacking ABMs. To comply with the BOJ's new ABM standards, banks such as NCB and Scotiabank started stacking their ABMs with more $5,000 notes to reduce downtime. However, the BOJ wants to manage the distribution of the $5,000 notes so it doesn't deplete its stash, which is ordered only once a year. On the other hand, banks are now worried about increased ABM downtimes during the Christmas shopping season as more people draw cash from ABMs. The International Energy Agency says oil prices should drop significantly in 2025 due to a global oil surplus. The IEA said global markets are expected to see an oil surplus of nearly 1 million barrels per day in 2025, despite OPEC Plus countries extending their supply cut. The agency said higher production combined with falling demand as consumers and businesses switch to electric vehicles and renewable energy are the leading causes behind the oversupply. The IEA said that the world's total oil supply capacity is expected to rise to about 114 million barrels a day by 2030. The group said this would be 8 million barrels a day more than the projected demand.
What's Hot was brought to you by JMMB Group, your best interest at heart.
12 months. That's all it takes to transform your finances with Money Mission Premium. For the next year, I'll guide you on the process to take your finances to the next level. You'll get my premium courses, monthly mentorship, and a great community of peers to help you on your journey. Go to moneymissionja.com. Let's get this money. Welcome back. Great to see all the familiar faces in the chat. Let me see who we have. I see those fire emojis coming through. Kish says ready and waiting. We got Dwight joining from Spanish Town, looking to see if the price of stocks start rising in the few days we have left in the new year, in the old year, in 2024. Sean saying good night. He's ready and waiting, saying U.S. markets have been having a field day. Tech stocks are on the move. Interesting. Nana Sense is watching from far, far away as usual. We also have Travel Chef checking in and ready. Dwight says the market is becoming bored because it seems like people are taking profit for Christmas shopping this week. Good take. Glamour Wayne says sending greetings from Portland. We have Humble Boss checking in from Negril. Richard Bell in St. James, wishing everyone a blessed evening. Roswell coming from Unity Hall. Christine saying good night from Kingston 19. Christopher John says, let's get this moolah. Love it, Christopher. Lots of people sending their fire emojis. You guys have been with us all 250 episodes. Humble Boss, Sean, How Wow Records, Christine, Christopher Shaw, Noreen, shout out from Belize. Hi, Noreen. Great to have you on this evening. Kish in London as always. Lori says greetings from CO. Where's that? Colorado? Lanestra sending her fire. Simone saying good night from Mapen Clarendon. Traveler is there in Wyoming. And a lot of people are, Levar says, still waiting for KRM to list on the stock market. You're going to wait quite a while longer for that, Levar, if ever. And Kimberly says she lives in Antigua, wants to know how she can invest. Kimberly, go to investingforbeginnersja.com and you learn everything that you need to know. We're actually updating the course come January. So investingforbeginnersja.com, Kimberly. That is the place that you should go. Ingrid is in Bull Bay and Life Roots is in Montego Bay Private is joining us from Jamaica. So guys, start asking your questions in the chat because like I said, tonight is Ask the Analyst. So your burning questions for 2024 and 2025 outlook as well. And remember, our first show of the year is always a year in review. So we're going to have all of our analysts on. I think it's like 5 of them that we've had on regularly this year, and they will be giving their 2025 predictions in our first show of the new year, which will be airing on January 7th. But tonight, let me introduce our analyst panel. We have back with us our OG taking stock analyst, David Rose, as well as joining us for the first time, Richardo Williams, who is the Vice President of Asset Management and Research over at Barita. Hi, Richardo. Welcome back, David.
Nice to meet you, Kalila.
Night, Kalila. Still working to talk to you.
Yes, I know you're busy tonight, David, trying to meet your deadline. So let's get straight to it. And for our viewers, leave your questions in the chat because you have an opportunity of a lifetime tonight to consult with 2 great minds in the investment space. So I'm going to start with, what am I starting with this evening? David. So David, we are looking tonight at AS Bryden. So AS Bryden is actually launching a takeover bid for CPJ. These are 2 companies that we have spoken about in the past. AS Bryden was acquired by Seprod, and then CPJ a couple of years ago was the best performing stock on the JSC. So tell us about, give us the update. What's going on?
So to keep it simple, what has happened is that it was a 2-share transaction. So they back in July, I believe it was July 9, CPJ would have, AS Bryden would have acquired a 48% stake in CPJ from Mayberry Jamaican Equities, several other shareholders, from Mark and Tom's holding companies as well. So that was the first transaction. That wasn't at $10.50 per share. That was cash. Now, what you had afterwards was a continued transaction whereby they acquired in a 30%. Apologies, the first transaction was 44.8%, and then the second transaction was additional 30%. So AS Bryden acquired the remaining 30% of CPJ from Mark and Tom. That's what they got 75%. However, the second transaction was not necessarily a cash transaction. It was like an asset swap. So it was a share for share transaction. So Mark and Tom surrendered 30% of CPJ to AS Bryden. AS Bryden gave them newly issued AS Bryden shares to make them become shares of AS Bryden. And Mark was appointed to the board of Seprod a couple of weeks ago, and Tom Taylor is going to be appointed to the board of AS Bryden. So quite a little, scenario transaction for the owners. But what's this takeover bid? So for those who don't know and want to appreciate things a little bit better in Jamaica, the JSC's rules are built on the Jamaican Securities Act. So some of the things in the JSC rules is not necessarily the JSC's own rules, it's more so them just referencing the actual Securities Act. So once you get more than 50% of the voting control of a company's particular shares, whichever method it is or way, the takeover offer has to be made to all remaining shareholders of the same class. Now, CPJ only has ordinary shares, so they have to make a takeover offer to the remaining shareholders that own 25%. Now, here's where it gets interesting. So, if the company surpasses the 80% threshold, or less than 100 shareholders own at least 20% of the company, the JSC can delist the company. So, if either two of those conditions are breached by any listed company, not in this kind of transaction alone, the JSC can delist you. So, back in June 2019, after Barita did its, first rights issue, Cornerstone was actually above the 80% threshold. And after they did their second rights issue, they went below the 80% threshold, for Barita at that point in September 2019. So that's really, what happens in a sense. So CPJ will make an offer by January 5. Shareholders can take it or reject it. But I expect CPJ to remain listed on the JSC in turn.
So they would still be two separate companies.
Correct. So it's not like it's going to have a consolidation of both businesses, because AS Bryden is really based from Trinidad and CPJ is based here in Jamaica. So both of them, have their place in each market. CPJ is a purveyor, distributor, manufacturer, mainly to the tourism space and some level of retail. But with respect to AS Bryden, they really distribute out of Trinidad. Trinidad representing Guyana, Barbados, and this is their second major transaction or acquisition this year. So that's some good context to point out.
So then you have Seprod owning Bryden and Bryden owning CPJ.
Yeah, quite a nest family.
Well, they're all connected. I mean, I can see, how the synergies would work because they're all in that same industry. So it makes sense if shareholders go for it. Do you think that's likely? You attend these shareholder meetings all the time.
So to give some context, basically, apologies, just you something at the same time when I talk to you, but in a sense, you have the distribution market, right? You have different segments. So you have retail, so your swizzle, your water, your different juices, like that's kind of like a regular retail beverage market. Then where CPJ specializes in is in the hospitality market, tourism. So they provide, mixed slushy compositions, to make like your margaritas and so on. They offer, branded meats and so forth. So most of their business, at least 8%, is from the tourism space. The remainder is in the retail space. So, CPJ retail by Lady Musgrave Road, Drax Hall, at their head office in Montego Bay. So that's to give some context. Now, Seprod had always been trying to break into that space, which is what they call the HORECA, hotels, restaurants, catering. There are different terms and ways to describe the distribution space. But basically, in effect, they've been trying to break in forever. And it's not easy to go into that space, especially with established players. Now, Mark and Tommy, would have wanted to step aside, let somebody else run the business. They got a CEO in 2021 or 2022, I believe. CEO spent about 4 months, didn't work out. I heard that the reason why CPJ moved to the main market was, to open themselves up to a potential acquisition. That didn't pan out, but now we're seeing AS Bryden become that majority shareholder and integrate them in this massive distribution footprint across the region, because CPJ got part of the Moet Hennessy portfolio recently. AS Bryden also acquired a wine and spirits distributor in Barbados. So I'm just showing that there's a good number of synergies that are coming between all these businesses that are being acquired on this AS Bryden umbrella.
You say all of that, but you don't answer the question. What's likely to happen when shareholders get this proposal? Do you think they're going to go for it?
It depends. And let me say how it depends. It might be the case of a MFS and an innovative energy transaction. What do I mean by that? So basically, in those two transactions, the shares were sold, or I should say, offer was made was like probably extremely below market price. So Siboney's offer price or takeover price was 5 cents versus the market price of $1. So it's technically done to incentivize shareholders to not provide or selling in shares to the new owners because they want to keep the company listed. So we have two reference prices, 8.05, which was the transaction that happened a couple of weeks ago. That's a nominal reference price because it was the share for share transaction. And then you have the $10.50, which was the cash price that was paid back in July. Now, it's likely that you're probably going to see a price below the current market price being offered because, realistically speaking, they don't want to delist the company. And if some persons do surrender their shares, they can always sell those shares back on the market to get below the 8% threshold. So I don't expect CPJ to be delisted.
Okay, well, I think you answered Humble Boss's question. Humble was asking, what if a shareholder is down? And the offer price is less than the shareholder average price, and they want to reject the offer? Well, they have all rights to reject the offer.
You just don't want to submit the documents. As simple as that.
Let me bring Richardo in. Richardo, I said it was your first time. Is it? Because you're looking familiar. I feel like you haven't been on the show before.
No, this is my first time. So thank you for having me.
Welcome to Taking Stock. It is our pleasure to have you on, and looking forward to your expertise and what you have to offer. So tonight you are actually talking about the global market outlook, which is something that we do talk about here on Taking Stock. Yes, we have a heavy focus on Jamaican stocks, but we also are looking to the north primarily to see what is happening, especially on the US markets. But I think you're taking a broader approach, looking at the global market outlook. So what has it been like in 2024 since we're at the final show of the year? Give us an overview.
Well, I think, we eventually will settle on what's happening in the US, because this time around, certainly where we are in the global macroeconomic cycle, it's the US economy that is pretty much taking the global economy with it on its back, so to speak, as compared to, say, the last time when we had a major recession, 2007, 2008, when it was the Chinese economy that basically brought the world on its back, so to speak. So what 2024 has really been about is a resurgent, stronger than anticipated US economy, supported by what we would call strong household or consumer demand. And that has translated into really fantastic returns on the US equities market. I'm sure your listeners would probably hear the term about the Magnificent Seven, or the tech stocks that have really dominated the investment returns so far. Now, what has really contributed to this? I'll just touch on two key macro aggregates. These are the things that you usually focus on when you want to try to determine where in the economic cycle you are, and therefore what kind of investment strategies you really want to pursue. The first one is really global growth. And that this number has been revised a number of times during 2024. The most recent one was in October by the IMF in its World Economic Outlook. And we're looking at about 3.2% for global growth in 2024, going into 2025. And for the US, it is expected to be about 2.5% next year. Now, that is really a significant growth. Now, you can contrast that is the US performance in 2024 and the expectations for next year. You can contrast that with the other three large economies that constitute the top four, right? And think about what the recessionary conditions look like. Because last year, this time, or earlier in the year, this time, there was significant concern that there would be a major recession, right? No,
I remember that conversation. Yeah, we were talking about, is a recession coming? There was a lot of speculation.
Absolutely. So if we take the US, for example, as at the last numbers in November, the probability in percentage terms of a recession happening is about 62%. If we take the second largest economy, China, that number is 78%. Now, if we go back to the US a little bit, last year, this time, that probability was actually at 84%. So you see how much that number has come down. Whereas for China, the reverse has actually happened. Last year at this time it was over 57%, and now it is at 78%. Now the Chinese government has introduced a number of what we call fiscal stimulus measures with the anticipation or expectation that this will actually support local demand so that this number doesn't get realized. So this is something that we're really looking at in earnest and tracking, because the truth is, if the Chinese economy goes into recession, notwithstanding the strength that the US economy has demonstrated to date, it will have implications for all of us, right? So this is something that we're watching in earnest. The next economy that we want to look at is Japan. Japan is actually doing really well. The expectation there is about 33%. It hasn't changed that much year over year. And again, Warren Buffett has demonstrated his investment acumen here by going into Japan very early last year and has positioned quite a bit of Berkshire Hathaway's portfolio in Japanese assets, and he has gotten a windfall there.
But we had that whole situation in Japan just a couple months ago, where they had, was it negative interest rates, and that caused a whole drama on the global markets.
Well, the thing about Japan is because it has had so much, just to so that our listeners can really relate to the information. They have so much resources, so to speak, right? That even when we're going through the pandemic, they did not have the level of inflation that the world saw. So consequently, they were still in real terms having negative interest rates. So, but when interest rates became a little bit more positive there, what that effectively means is that everybody who was investing in US dollars finally had some positive returns or incentive to invest in the yen. Now, what it means is that if you have large institutional investors, such as some of the sovereign wealth funds, moving away from the USD to yen-based assets, then it is going to cause some significant disruptions. So that was really the basis for that little gyration we saw in the global economy at that point. Now it has kind of abated somewhat because other markets are actually offering very good and attractive assets, such as in the UK as well. It has taken away some of the focus and attention from Japan. And the final economy that I would probably just want to introduce to us here is Germany. No, Germany is the worst of the four. Theirs is at 80%. And for a very long time, Germany was
80% likelihood of a recession.
Likelihood of a recession, right? And that has increased just marginally from 78% this time last year. There was a time when we would call Germany the sick man of Europe, until Angela Merkel came aboard as a chancellor there, and she did a spectacular job of humming, the manufacturing engine of Germany, and got it really, really going from about 2010, 2011 until she departed office about 2018 thereabouts, and Germany has pretty much taken a nosedive since then. Now, Germany is a pretty strategic economy to all of Europe. So to the extent that Germany enters a recession, which it seems like it is definitely on course to do, then all of Europe effectively will be drawn into it, which is one of the primary reasons why the European Central Bank, the ECB, is moving at a more aggressive clip in reducing interest rates as compared to the Federal Reserve in the US. Now, I've said all of this. What does it really mean in practical terms for you as investors? The first is that US equities will remain attractive over the financial year 2025, possibly into 2026, just given the nature of the economic growth and strength that we're seeing. And there is the factor of President Trump, or President-elect Trump, and he has started off as he did the last time with some
big factor.
Right.
Factor, I would say.
Yes. So that's a very interesting thing. No, this time around, Trump is actually going by the same playbook, and effectively we're seeing assets pricing and moving almost similar to how we saw them in 2016, 17, and 18. And I'll give you some examples. And this is how we can actually position our portfolios to do so. The first is actually financials, right? You would expect that with the Federal Reserve actually reducing interest rates, then financial companies would actually be poised to perform, right? That was the expectation in 2016. And for a little bit, after the elections in 2016, the financial sector actually performed well. You can look at the XLF, which is the index that tracks the financial space, and it's something that you can invest in. Didn't perform very well, and we're actually seeing the same trajectory this time around, even if we're thinking about the impending deregulation, the reduction in interest rates, etc. So this is one space that we can look at, because it has the possibility, I would say 50-50 likelihood of actually market performing, that it will give you some positive returns, but it will not be extraordinary. So that's one. Two is technology. Now, technology was a significant outperformer in 2016, 2017, and 2018. It is following the very same trajectory. Now, if we look at the SLK, which tracks technology companies, year to date, the XLK is up close to 30%, and we anticipate that this will continue. Why do we say so? Well, there are a number of reasons. AI is not just a fad this time around. AI actually has some significant tailwinds and structural drivers that is supporting AI across the full spectrum. One of which is the 1.3 trillion fiscal stimulus bill that was signed by President Biden in 2022. Now, that is actually supporting a significant build-out of technology right across the US. We're talking about data centers, which is one of the fastest growing infrastructure assets in the US. I can give you an example of a company there, Sterling Infrastructure, that is building out data centers for the Metas, the Amazons, etc. That stock is up over 190% year to date. There's also Celestica, which is sorting out the supply chain issues in the AI space. That is up over 200% year to date. And most of the tailwinds behind this is actually the fiscal stimulus from President Biden's bill of 2022. And the good thing about it is that there is significant backlog of projects that are expected to continue into the foreseeable future. And we don't anticipate that President Trump is going to unwind this particular program. Based on the numbers, we are seeing about north of 500 billion of that money that is left to be spent. So you realize all of that will get translated into data center AI spend right across the board. And of course, we're hearing about the Department of Government Efficiency headed by Elon Musk. Again, just from our regulatory perspective, there's significant tailwind behind the tech space. And the final element of things this time around is that industrials are actually going to market perform. And year to date, the industrial sector, which is proxied by the XLI ETF, which you can buy directly, this is also doing very well, because again, this is being supported by the actual fiscal stimulus and the drivers therefrom, which is basically just a broadband infrastructure that is being built right across the US. So if you can't invest, or you don't want to take those direct exposures in single names or through the ETFs, Bryden actually has a very good product, which is called FX Growth Fund, that is up just under 30% year to date, 30.8% actually. And that invests directly in US equities, right? So this is something that your viewers can actually research, and if they are so inclined, can definitely take some look into.
Tell us again what it's called. The what fund?
The FX Growth Fund.
FX Growth Fund.
Yes.
All
So
right, I'm
we're
going to put it in
up
the chat.
Yes. And the final thing that I will end with, Kalila, just to see what is happening in the macro background and how that translates into your portfolio, is that there's also a space for fixed income, right? Because even though interest rates are coming down, the expectation is that the uplift in fixed income returns is going to be capped somewhat, because inflation is still a bit more resilient than we kind of expected, and therefore the magnitude of rate cuts that we anticipated, say, a year ago is not coming to fruition, even locally here in Jamaica. But there's still a space for fixed income in your portfolio. This is something that we always emphasize. It has to be a portfolio context. Think about your portfolio as a basket. You have some pumpkin, you have some yam, you have, that kind of thing in there. You want to mix it up so that they provide a support and balance for each other. Because fixed income typically just supports the more riskier assets that you have, which are your equities. So one way you can play this market is through your the FX Bond Fund, which is another fund that we offer here at Bryden. Over the last 12 months, we're up about 5%, and this is on US dollars, right? So if you have one portfolio on the equities side, giving you 30%, again in US, and you have 5% on your fixed income, and the good thing about fixed income is that if there's a pullback in your equities, then the fixed income effectively cushions or helps you to cushion that blow. You can think about fixed income in your portfolio almost like the shocks, in on your car. Helps you to go through those potholes, right? A pothole is a topical thing now, right? I'm not sure if pothole not going down that road, right? But it helps to absorb those shocks. And the final thing that I will say again too is that alternative assets have become something of, in vogue, so to speak, it has a place in your portfolio as well. Real estate is a very good way to play the alternative space. And we also offer some exposure here in Burrito through our real estate fund, which year to date is up about 40%, right? I should say, however, that this kind of return for the real estate fund is not necessarily expected to continue in the foreseeable future, though we expect above average growth. But when you put all of this together in a nice portfolio and you have a kind of long-term orientation, this is a very good way to actually grow your wealth. So in a nutshell, Kalila, what I've said is that major economies, save for the US, is expected to do well, right? So, but you must continue to invest with some degree of caution.
I thought you said there's a high possibility of recession in many of those major economies, except for the US.
Except for the US, right?
So the US is expected to do well, but other major economies not so much.
Absolutely. So that's correct. That's correct. So given that, it is expected that you should still put your capital to play. Don't sit on the sidelines, because here's a final point which didn't come through here fully. I didn't go through, but I'll just use a minute just to indicate how we think about recessions. So there is actually a recession dating committee in the US, and how you typically measure a recession, we use 3 Ds. We look at the depth, the duration, and the dispersion. All right, that's typically how you characterize a recession. So the greater the degree you are on those 3 Ds, the most terrible the recession is. You can think about the one in most recent history, being 2007 to 2008, actually into 2009. That one was really bad. So it was a significant degree on those 3 Ds. This time around, just based on the nature of the resilience that we have in the financial system globally, just in terms of liquidity and capital levels, as well as what we call the consumer balance sheet. They are not very leveraged as they were going into the recession in 2007, the US being a case in point, where you have people with terrible credit scores getting some really fantastic mortgages. When things go haywire, then it's going to blow up the system. That doesn't obtain today. So the thing is, even if you have a recession, it is going to be what we call a garden type recession. In other words, I saw a very nice term for it recently. It is going to be a rolling, slowing down, right? So you know the economy is slowing, but it is not something that is going to put you out of kilter. So having said that, it means that there is still the opportunity for you to be quite judicious in putting your capital to work in strong companies. We always say companies that have very good balance sheet, just in terms of the level of debt that they have there, very good, capable and experienced management, and in sectors that prove to be quite resilient. Once you can do that, I think we can get through any kind of slowdown safely, and are well poised to take advantage of the eventual upswing. So I'll stop there.
Yes, all right. Thanks, Ricardo. Lots of great points made there. We're going to take a break. When we come back, 2 things in particular I want to touch on. Oil prices, the outlook for 2025, and Scotiabank now becoming the most valuable company on the JSE. So we're going to look at that after the break, and we'll also take questions from our viewers. We'll be right back. For your market recap, the JSE Combined Index gained over 2,000 points, or almost 1% last week. 126 stocks traded across the main and junior markets for the week ending Friday, December 13, 2024. 58 made gains, 58 lost value, and 10 stayed the same. 105 million shares changed hands on the Jamaican dollar market, valued at $923 million. Wigton was the week's most traded stock, with 29 million shares changing hands. It started the week at $1.29. Transjam traded the second highest volume. The stock lost 27 cents to open Monday at $4.19. And Sagicor Select Funds Manufacturing and Distribution rounded out last week's most traded. It started the week at 73 cents. Now let's see who had the biggest gains of the week. Sterling Investments USD was the week's top gainer, up 23%. First Rock Real Estate USD had the second biggest gain, up almost 18%, and Paramount Trading rounded out the top stocks, up 15%. On the losing side now, Margaritaville Turks USD was the week's biggest loser. The stock fell 26% to open Monday at 6 cents US. Its Jamaican dollar counterpart was also down 26%, and First Rock Real Estate lost 17%. Over on the Trinidad and Tobago Stock Exchange, the composite index lost 30 points, or almost 3% last week. Republic Financial was the TTSE's most traded stock. It gained 28 cents to open Monday at $112.78 TT. Trinidad Cement was the market's top gainer, up 5% to start the week at $2.30 TT. And on the losing side, CIBC Caribbean Bank fell 13% to open Monday at $7.57 TT. Over in the U.S., the Dow Jones lost almost 2%, while the S&P 500 and the Nasdaq were mostly flat. At the pumps, gas prices fell $2.94 in Jamaica last week. Regular diesel fell $3.06, while low sulfur diesel dipped $2.97. In foreign exchange, it took an average $156.76 Jamaican to purchase $1 US last Friday. That's 23 cents more than the week before. Meanwhile, it took an average $111.77 Jamaican to purchase $1 Canadian. $1 British pound cost on average $199.54 Jamaican, and you could buy €1 for $164.41 Jamaican on average. Finally, on the crypto markets, Bitcoin gained another 3% over the past 5 days, trading at $104,058 on Monday, while Ethereum gained 2% last week, trading at $3,906 on Monday. So, you've been supporting Taking Stock on my content all over social media for the past 5 years, and I can't thank you enough. Money Media has grown from just me in my living room with a cell phone to a full production team. And guess what? It takes time and money to bring you the quality show that you expect week after week. And we need your help to keep it going another 5 or even 50 years. Support us by subscribing to our Patreon at patreon.com/Kalila Ray. The link is in the description. This segment of Taking Stock, The Analysts, is brought to you by Burita Investments.
Disclaimer. This is not intended as financial advice. Please consult a licensed financial advisor before making investment decisions.
Welcome back. So we have quite a few questions in the chat, but I want to touch on 2 things before that because these are 2 pretty big developments. David, let me bring you back in first. Scotiabank is now the most valuable company on the Jamaica Stock Exchange. Does this come as a surprise? Was this unexpected?
It depends on which side of the coin you're in, Kalila, because it's unexpected if you're on the side that is like, but how are they doing so much better than everybody else? But if you've been monitoring Scotiabank's, earnings, its loan portfolio growth, and just even looking at the reports of some listed companies, you would have gotten a sense that, hey, they are the go-to bank, in Jamaica. So what do I mean by that? So to give some context, basically, with respect to Scotia Group, I should say, is comprised of 3 subsidiaries. Bank of Nova Scotia Jamaica, that's Scotiabank Jamaica, Scotia Life Insurance, and Scotia Investments, and then they have the New Jersey Insurance Agency, right? With respect to Scotiabank Jamaica, for one, they've always had a low cost of capital. So what do I mean by that? So, they always talk about how banks take your deposits and lend it out to others to make money on it. So to put it into further context, some banks, for example, might earn $1 of interest income, from lending money out on loans, but they pay about 36 cents in interest expense, to keep their deposits coming in and keep their clients happy. In the case of Scotia, they earn $1 in loans, but they're only paying about 2 cents or less in interest expense on deposits. So you're talking about a business where the cost of capital is next to nothing. Now, what does that do? When you can pay your depositors so little in the sense of interest expense or interest on their money, because they have confidence in you, they feel comfortable and so forth, it allows for you to have a lot more dynamic pricing in the market. So what do you mean by that? So Musinko Group would have gotten a $3 billion loan from Scotiabank Jamaica at 6% back in 2023. 6% back in 2023 sounds insane today. And even though Musinko is a great business of its own caliber, even for a business of them to get like 6% is still phenomenal. They would have, lent to Agostini's Limited for their entry into Jamaica when they acquired Health Brands Limited, because of the relationship of Pacific Airport Group in Mexico with Scotiabank Mexico. They lent money to, I believe it's the Montego Bay arm of Pacific Airport Group, the ones that run Jamaican Airport. So I'm just showing you that between the growth on the business side, commercial side, and then the growth in the mortgage side, which is pretty phenomenal, because back in 2019, the Bank of Nova Scotia, or Scotiabank Jamaica, they had about $37 billion worth of mortgages, residential mortgages, right, Kalila? Not talking about mortgages that includes, what that mortgages to register a property for a commercial client, talking residential mortgages.
Right.
They had $37 billion then. They're at $97 billion now in 2024 October.
Wow.
And they've grown their mortgage book by at least 25% for the last 3 financial years. Now, to put it into context even
Look up
further.
Audrey Tugwell Henry.
Well, to put it into context further, Kalila. So think about this for a second. Before banks had to adjust their rates upwards in 22 and 23, right? Scotiabank was offering mortgages at 6.49%. That sounds impossible to hear about today in 2024 December. So think about it for a second. If I want to take my mortgage, if I wanted to, say, hey, I want to own something, I'm going to look for the cheapest source, and that was Scotiabank. And even after they adjusted their rates back in March, and then the 50 basis points, Scotiabank's mortgage rate at 8.99% is among the cheapest in the entire market. So one of the larger banks, they're offering mortgages at 11%. Building Society is offering at 10.85, which is 13%. So like from Scotia and CIBC Caribbean Jamaica, most other banks are offering either in the double-digit region or 9.5% and above.
So how is Scotia able to come in so much lower than everybody else?
I just mentioned it, Kalila. They have very cheap cost of capital. So let's look at the structure of Scotia Group, right? Scotia Group didn't necessarily seek to expand to facilitate some level of potential growth by acquisitions or so forth. So for example, NCB Financial Group, they have NCBJ, the bank, Garden Holdings, Clarion, right? When NCB Financial Group refinanced debt recently, about $15 billion, that's an extra $1 billion interest expense each year. NCBJ supports NCB Financial Group, and that $1 billion interest expense has to be passed on somewhere. So that is where you might see a little bit of stickiness in rates coming down at NCBJ. In the case of Scotia Group, they don't have debt. So they don't necessarily need to, have to be considering, all right, I have a IDB loan or some other loan at 7%, 8%, 9%, and I need to match a particular cost of capital about a particular spread to be profitable. They don't have that scenario. As I mentioned earlier, the interest income from loans is matched by 2 cents in interest expense on deposits. So when your deposits are that cheap, you're literally, able to really benefit from extremely aggressive pricing in the market. And the thing is, Scotiabank is into the best of the best, in the sense that if you're able to a $310 billion portfolio, right, Kalila, and less than probably 15 billion is what you'd call bad or stage 3 or impaired. So you're growing your portfolio on cheap credit, or I should say, cheap capital. Then on top of that, you're lending into the best quality borrowers. So then, like, you get the money out willy-nilly, and you're saying to yourself, all right, I have a $50 million, non-payment loan book, that's bad or whatever. No, you're just growing your loan book, and you're having very minimal increases in defaults or bad customers.
Good for them.
No, so I'm just giving you the context, Khalil. Like, if you're getting Scotiabank, Trinidad and Tobago, or other markets Scotiabank operates, that between that mixture of, low cost of capital, the consolidated operational costs, that come through Canada. So, like, for example, the Scotiabank Caribbean app is the same app used in Jamaica, Trinidad, Barbados. So, one platform, shared costs. So, like, for example, about $3 billion each year is paid to the Bank of Nova Scotia in Canada by Scotia Jamaica as expenses. And just to give a little bit further context what I'm saying, based on my calculations, after subtracting intercompany transactions, Scotiabank Jamaica would represent call it about 1/3 of the Caribbean and Central American revenue for Scotiabank in terms of net profit for Q4. So Q4's net profit was 170 million Canadian dollars. Scotia Jamaica, after I did a little bit of rough math to pull out the intercompany transactions, they're at about $53 million in terms of net profit. So this is just to show you context that, hey,
prize child.
Jamaica, that is why Scotiabank Jamaica, not in any consideration in Canada or even in the region, talking about divestment. So so the reason I mentioned that a while ago is that basically Scotiabank had a leader, prior CEO Bryden Porter. He was a lot more conservative. Scotia Bank would have sold a good number of its Eastern Caribbean operations, sold Belize. I don't think sold Guyana, but they have sold a number of regional operations.
But they're not selling Jamaica. They're not selling the Pearl.
No, but think about it, Kalila. Jamaica is spinning off consistent cash flow every quarter, not having any difficulties in converting that money out. So think about it for a second, Kalila. Jamaica and Trinidad are two very large markets in the English-speaking Caribbean, right? Scotia Bank Caribbean Holdings, which is the holding company they use, owns 71% of Jamaica. They only own 50% of Trinidad. And Trinidad is having such terrible FX issues right now, such as of December 1, you cannot use your Scotiabank debit card out of Trinidad at international ATMs or point-of-sale machines.
Yeah, so lots of issues. So I want to come back to Richardo, but before we do that, so somebody pointed out that Scotia fell back to number 2. So I just checked it on My Money JA, and yes, indeed, but it's neck and neck. So they're neck and neck with Massey. They move back and forth, I suppose. Let me just show them, David.
So just to give some context, Kalila, my story is to the largest Jamaican company. I did not say the large. I made that very clear distinction with that very particular noun. I said the largest Jamaican company, not the largest company, JSE. It was on Thursday when it's at $54, but it's the largest Jamaican company of market cap, not necessarily the largest company, JSE, right now.
Okay, so this is what it looks like. Massey is at 8.7% market of the JSE. Scotia Group Jamaica is at 8.6%. So $2 billion separate them right now. 162 billion compared to 160 billion in market cap. All right, so wow, I can't believe the time has gone so fast. I have a lot of questions from the audience. I'll take maybe about 3. Let's see what the audience wants to know from you guys. Let's see. So Sean, first of all, I have to question the premise of your question here, Sean. Sean says, Jamaica is technically now in a recession. How do you see that affecting the stock market next year? Sean, who tell us that Jamaica is now technically in a recession? That is...
Kalila, remember, technical definition of recession is defined. It's 2 consecutive...
David, let me finish saying what I want to say now. Jeez. You not even let me finish what I'm about to say. So he's claiming, so yes, exactly what I was going to say. So Jamaica is not in a recession. Our recession numbers are determined by Statin. The latest numbers from Statin are up to the June quarter, April to June, which has not indicated a recession. What you may be referring to is the PIOJ's numbers. PIOJ has projected a decline for the July to September quarter, and usually Statin follows on from PIOJ, but it becomes official when Statin reports it. So PIOJ is just a projection. And either way, that projection is for one quarter. A recession comes after 2 consecutive quarters of economic growth. So you're way ahead of yourself, Sean, but I will still pose the question. There is an economic decline, or an apparent, a projected economic decline, according to PIOJ. So, Richardo, how do you see that affecting the stock market next year? You're muted.
Oh, I'm sorry. Still carrying that from 2020, right? Speaking on mute. The first thing is that this thing about 2 consecutive quarters of negative economic growth constituting a recession is not really correct. It's just a convention, because you have instances elsewhere where you could have 2 consecutive quarters of economic of decline or negative growth, and it is not yet a recession, right? So we need to be careful about that. But the larger point, however,
that's usually politics. So they will try to argue that it's not technically, especially if it's just a minor point something percent. They're going to try to argue that it's not a recession. But
but the larger point, however, is that is the concern about economic growth,
right?
And we also should be reminded that, you know, before heading into 2020 and COVID-19 struck, if you plot the quarterly GDP trajectory, we're actually on an economic descent, right? Then we had the local fiscal stimulus measures kind of propped up growth somewhat. So in essence, what we're kind of seeing now is a normalization of the economy. And this wasn't helped with the fact that recently we had the passage of Hurricane Beryl, which itself took away some of the economic momentum that we had. So based on what the PIOJ is forecasting, we would have economic growth of anywhere between 0 to negative 1%, I believe, over the financial year. And in terms of calendar year, it is still going to be quite anemic going into next year. Now, what we can link this to, right, is a problem that has belabored Jamaica for a very long time, and that is what we call anemic growth. We just have not seen growth to sustain, our growth being sustained in the local economy, which is why the Prime Minister recently has effectively pinpointed that as something that is now squarely in focus for him. How can we unlock growth in the local economy? Now, stocks, as you know, is of all the asset classes, this is the one that is most directly impacted by economic growth. Because once there's high growth, it means there's high earnings. Once there's high earnings, it means that companies are doing well. So if the expectation is that we're going to have really docile economic momentum next year, then that indicates that earnings, particularly in, say, the real economy, etc., is likely to be on the lower side of things. The financial companies, however, could have a better fighting chance to the extent that they can reallocate or redeploy some of their financial assets into better performing investment securities in the global markets. That's one. And two, to the extent that we see any kind of capital markets activities resurging, that is maybe some debt refinancing or new issuances, that could give us some fee income. But then again, that is a function of how robust the economy is likely to be. So to answer very directly, we don't expect a banger year in 2025, just given the economic momentum, right? However, what I'll say is this, right? Because we always emphasize the idea that you're sitting at a point in time now, right? Knock on wood, all of us are going to be around in the next 10 years. And we're going to reflect and we're going to look back at this moment and say, hey, you know, at this point when we were talking, we had some fantastic assets that were trading at some ridiculously good valuations. So we have to look at the companies that have very good management, like what we're talking about this evening of ACE, Bryden, the associated companies within that complex, such as Seprod, for example, fantastic and terrific and experienced managers. Those are trading at really good discounts, right? Now is the time really for you to be averaging into these companies that you think will be around for the next decade and decades to come. That is when you will actually make money. You don't make money at the top of the cycle when every major concern is already priced in. It is now you really should be taking the chance to bet on some really good companies. Look at those companies, for example, in the financial space as well, that is repairing and preparing their balance sheets for a new regulatory dispensation when, say, the Twin Peaks regulation is here and Basel III is fully worked out. What will that look like? Who will be better positioned to finance the growth as we go forward? So that is what I would say. I think you should effectively change your investment horizon to a longer time period. The final thing I will say on this, Kalila, is that there is actually, when you are a retail investor, you actually have a significant advantage. I'm letting you know the secrets here, right? You actually have an advantage over the fund manager guys like myself, right? We are managing against a benchmark. We have to be thinking of our returns year on year on year. You don't have that constraint. So you can engage in what we call time arbitrage. You have the capacity to really look 3 years forward and to buy at really good prices and then grow into your valuations. Imagine buying some companies at 5 times earnings. In 5-10 years, those effectively can be significantly higher multiples than that. So that is really where wealth is made. One of my favorite investors, Charlie Mungus, loves to say that, listen, the wealth is actually made in the waiting. So buy and watch your assets and wealth grow.
But still, I know our viewers are going to be disappointed to hear you say that you're not expecting a strong year for 2025 based on the economic numbers. But isn't this recession, the negative growth that we are experiencing this year, wouldn't you say that's primarily because of Hurricane Beryl, and so that's not likely to continue?
Yes. So even if once you read like the Bank of Jamaica's Monetary Policy Committee meeting reports, the BOJ's quarterly monetary policy report itself and the PIOJ, it did indicate that the impact of Beryl will be a drag in the near term, right? But where growth will eventually resettle is going to be on the lower side of things, right? Because you have to think about it, right? You have to think about the economy as
well, it's been on the lower side of things for years upon years. And the only time we had decent growth was right when we were recovering from COVID. It was the only year we finally hit the 5 and 4, the 5%. That was.
And this is where now I think things can get interesting, right? If we have the Spark program, which just by virtue of how you compute GDP, that is something that will translate into incomes. It will translate into what we call the gross capital formation of the country. The same thing for this JPS project, 17 million US. The same thing with the Pan-Caribbean joint venture at Rio Cobre. Once we have some of those large infrastructure projects coming on stream, then that will actually help to stimulate and sustain growth. But what we really want to, the point that I really want to get home is that you cannot expect a significant growth of 5 and 6 and 7% if we continue business as usual. We have to get the mechanisms of growth going, which is effectively where I hear the Prime Minister recently focusing, which is why I'm saying and recommending to our viewers that, listen, I know it's painful to not, it's like expecting a bonus next year and don't get it, right? But you have to take a longer term view, just given where we are in our economic cycle.
Well, Shells, why you call me out like this? Shells says, so Khalil, I don't think Jamaica is going to get hurricane next year. Do we want to bet on that? I would hope not, Shells. I really would hope not. Category 4 is quite enough for 1 year, given that I was in the heart of the affected 4 weeks without electricity. Not looking forward. Let's not speak that into being for next year at all. Let me take one more question before we wrap. Let's see who else we have here. Okay, I'll take this one from Sean, and I'll give both of you a minute to respond. So David, and I say a minute because we want to wrap up soon. David, what big economic event are you looking out for going into 2025?
To be honest, it's just seeing how the larger economies play out amidst not just the change in political leaders, but also just amidst the different players in the space. So we're seeing China really dominate in the vehicle space, not just EVs, but just in the vehicle space. Germany right now is continuing to suffer without cheap Russian gas. Canada's currency has taken quite a hit against the US dollar, especially with the finance minister resigning. And we have a couple of elections coming through next year. So in terms of economic outlook, it's going to be mixed. USA probably will have some level of positivity. Jamaica is watch and see, especially as we look forward to our own general election. And globally, that's going to come down to just potentially no major disruptions or levers being pulled to disrupt China, USA, or any other major global markets.
I'm glad you brought up Jamaica's election. So, Richard, I'm actually going to switch up the question on you. Follow up on that. Lori wants to know, do you see the upcoming general election affecting the local market being positively or negatively?
Typically, it is positive in more developed economies. That's typically the case because of the spend that the parties, usually expend to get their voters out and so forth. So the expectation is that could be positive for the economy in general. How long it takes to impact the local markets could take some time, because but there are specific companies that are directly tilted towards maybe that space. And I'm just saying, I'm not, implying any kind of political connections or anything. But if you think about, like, say, a main event, it is just right there. You expect a lot of events, a lot of maybe stage shows, that kind of thing, and they are well positioned to take advantage of that. So you can think about it in that respect, in specific, sectors. You can think about a company like Resinco, which has the most stock keeping units of all distributors locally. But I need to check if that is still the case. But there are, you can hardly buy anything without buying something from Resinco's stock keeping units. So people are going to buy drinks, people are going to buy cups and all of that kind of thing. So you can take very specific and sectoral interest, but at the level of the stock index itself, I'm not quite sure if that is going to have an immediate impact. It might take some time to work its way through.
In the US, typically the markets react more favorably to Republicans as opposed to Democrats. And because of policies that Republican governments tend to have. Is it like that in Jamaica, where the markets react more favorably to one party over another? That is an
extremely data dependent
Do we have that data?
I don't have that data.
I feel like I need to get like a master's student at UWI to research
I
that.
can't speculate on that one at all. Yeah.
No, that would make a good research topic.
I think so. I think so.
Well, thank you so much for joining us, Richardo. Great hearing your perspectives. And David, thank you as well. The OG, always reliable.
Later, Kalila. See you in
Thank you
2025.
as well, Kalila.
See you in 2025. We'll take our final break and come back with some comments. This segment of Taking Stock, The Analysts, was brought to you by Barita Investments. It's premium. It's premium. It's premium. Join the Money Mission community and sign up for a premium membership to learn how to budget, invest, and get out of debt. Go to moneymissionja.com and sign up for a premium membership to get started. Welcome back. Let me see your comments. I was just browsing through them. Let's see what we have here. Anne says, I like listening to your podcast. I feel like you give me a better perspective on my investments in the USA. Thank you so much, Anne. Much appreciated. Who else do we have? Lots more comments in the chat. A lot of comments were coming in just now on the tail end. So I'm just getting a chance to browse through them. Troyan says, big up to Scotiabank, by the way. Christine says that is true about the mortgage, with them having the lowest rates for mortgages. Raquel encouraging you to like the video. Raquel, you are our team spirit person in the chat every single week, and I can always rely on you to remind people to like the video. Let's see. Lots of people bigging up Richardo, saying well said. Troyan says you dropped the secret indeed. Who else we have here? Richardo, you can put your email address in the chat. Somebody wants to reach you, says they need your contact information. What else do we have? Hello to Learn, Grow, Invest. Good to see you in the chat as usual. Carl saying to big up myself. Thank you very much, Carl, over on Facebook. Roswell says, I've always taken small profits from my selected stock and placed my buy on a low to go get back a good price. So Roswell sharing her strategies there. Shell says tariffs, and more tariffs, referring to President-elect Trump, I suppose. I expect the average person in the Western world to be crying all of 2025. Let's see how that eventually plays out. Who else to do? Tavares says, once Wysinka doesn't do the APO, then we could. Roswell says, I'm looking at a well-cheap company and I hope it grows more, and its recent acquisition and well-chosen directors and its corporate governance. Troyan speculating on impact of the election next year. RPL and Fesco probably are going to sell enough gas during election and conference time. Lots of vehicles going to and fro. Good point, Troyan. Kish saying, thank you. Awesome analysis. Same says Malik. Thanks to you guys for your comments, Malik. And I think that's where we're going to leave it for this evening. So Richardo can be reached at r.williams@barita.com. For Sean, who was asking, r.williams@barita.com. We're going to put it in the description, and I think we'll put it in the chat as well. So if you want to reach out to him, you can always reach out to him there at r.williams. Yes, it is the final show for 2024. We will be back with our year in review on January 7. So that will be our first show of the year. It's going to be a pre-recorded show. And then our first live show will be on the 14th. Not sure who our guest is going to be yet. We have a few prospects, a few people we've reached out to. Normally, our first live show is with the managing director of the JSE. That's been our tradition, looking forward to a new year. And we also tend to look in January at, the best performing company on the stock exchange and also the worst performing company for the previous year. So those are some contenders. I don't know what that will be just yet. So, but look out for our year in review show coming up on January 6th. So let me remind you guys to like the video, subscribe to the channel Subscribe to the newsletter at getmoneynews.com so that you can be on the mailing list and get all the alerts when those notifications drop. I did not give your poll question. I completely forgot. Sashal, you forgot to remind me as well. Our poll question for this week. What was your business highlight of 2024? What was your business highlight of 2024? A, BOJ finally reducing interest rates. B, Trump getting reelected. C, Jamaica's new finance minister. Or other, leave a comment. And you can take that poll here on YouTube or over on X. And you can also leave a comment. What was your highlight of 2024? A, BOJ finally reducing interest rates. B, Trump getting reelected. C, Jamaica's new finance minister. D, other, leave a comment. Leave your answers in the chat or take the poll on YouTube or on X. So remember to like the video, subscribe to the channel, share with a friend, follow me all over social media at Kalila Ray and at Money Media JA as well. Follow Barita over at, I think their page is Barita Investments. You can just type in Barita on social media and you will find them. Thanks to our analysts this week, David and Richardo. Thanks to you, our viewers, for sticking with us yet another week for 250 episodes. I will see you again in 2025. See you next year.
Let's get this money.